What's going on, traders? Yes, I know it's a little bit of a red background. We want to change it on up. We got to have a good time. We're going to have a great show today. Let's go ahead. Let's get right into it. We're going to explain the exact reaction that I could see from the CPI data. We'll break it down a little bit here. We'll talk about the stock market dropping and what's coming up next. And I think you're going to start hearing more and more talk of recession. We'll talk about why I went short on Mara, the Bitcoin stocks, and I'm still holding a little bit there. Full disclosure. We'll see what happens there. They're getting knocked down. We'll talk about some earning stocks, Disney, Beyond Meat. We got Rivian. We got so much. And of course, we got Jay Woods coming from the New York Stock Exchange. Let's go, guys. It's time to get Money Mitch started.
It's time for Money Making Mitch. When investors need a story, we're going to the moon. Welcome to Money Mitch, where story is everything. I'm here to find you the next opportunity. It's all about the green hands. Now we all know the bull market is here to stay. Money Mitch.
What's going on out there, traders? Yes, I know we're seeing a little bit of the red action on out there, but we'll go ahead and get through it now. Like always, there's always opportunities also on the downside. You know, we've been calling a lot of short opportunities here, and they've been turning out well. Some can say that because the market's coming on down, but hey, sometimes one of the things I say is you got to be flexible. You got to be able to trade both ways of the trade, right? It's not only going long, maybe it's other ways to protect you on the downside, but definitely I think you should be able to play both sides of the market. Let's go ahead. We'll talk about some earnings. We'll get into those. First thing I want to talk about is the CPI data, of course, coming in a little bit. You know, it wasn't too far off, I think, about what is expected, but it didn't definitely drop there below the expectation. And that's one thing that we were all watching. We were going to see if we were going to get that rip and rally, right? I think a lot of people were leaning bullish. And then what we got is a knock right back down and kind of putting us more into the reality of what's really going on here. Are we going to see inflation start topping out? Well, the way that it's measured, you know, year over year, I do think that you'll eventually start seeing it top out. But the truth here, of course, and the battle here is what's going on with the real inflation, right? And are we going to start seeing the prices at the pump change? I don't think that's going away anytime soon, even though we could start seeing a topping of CPI data. The CPI gains came even though energy prices declined 2.7% for the month, including a 6.1% drop for gasoline. So you see there that we started seeing energy prices come a little bit down there, but it didn't go so far down because there was other factors jumping in here. On a 12-month basis, energy costs were still up 30.3%, while food rose 9.4%. The shelter index, which makes up about 1/3 of the CPI weighting, increased a 0.5, consistent with its rise over the previous 2 months, 5.1 up on the year-over-year basis. And this is the fastest gain since 91, guys. Airfares, we all have been seeing it. I've been talking about it, how they're just passing it on to the consumer here. Airfares continued to climb as more people took to the skies, even though, you know, we're getting some business travel to come back. You can see here prices rose 18.6%. So definitely seeing some more rise there. Used vehicles prices did fall about 0.4. But what did we see? New cars prices rise. And so what's going on here? The used cars inflation is going down. But what's end up happening is new cars are coming out. And what were the comments given by Toyota? Toyota said this morning, they said, what? They're worried about profitability because of inflation in the materials, the raw materials to make these vehicles. And I think that's a big warning flag for all the auto manufacturers out there. So, hey, just keep that aware, guys. And there's a reason why I'm calling shorts on Lucid, still holding that short, and Tesla breaking down big today. I think that was a sign that you're going to start seeing some of these auto manufacturers talk more and more how this is coming into play. Toyota, I think, kind of gave that little bit of a red flag today, and I think we got to go ahead and pay attention to that. Let's go ahead. Let's get into some other areas. We can talk about where the market's going, but of course, I mean, there's just no answer for this right now. We could take a look here. You guys can see here the SPY did crack through that 397 today. We actually rode right back up above that for a little bit, rallied for a little while. There's about 3 waves here. It came on down, did a little bit of corrective, tested up there towards the top, but you can see this has been holding here from the prior time. And you can see on the hourly chart a little bit more of this. So you see that down move, up 1, down 2, up 2, down 3, up 3, hit that multiple times, rejected from those levels. So if we can get back above there, I think we can get a rally. But now that we've hit those 3 times, my rule of 3 comes into play. And then I'm looking for this to cake it down there now through that 397. You can see how it's starting to reject there around that 397. We could pull this even down a little bit closer to exactly 397 here. We're going to look for that to kind of hold there, and any bounces reject off of and we're going to continue down. Now, where do we see the stop coming into? So one of the things that I did, and you guys see me do this, is I drew the fib retracements all the way from kind of that 2020 low towards the high of the market. And we have that 380. And I'm still looking at that. I think 390 is going to come into play. We're looking for that real washout of the bulls. A lot of people are saying, "Is this it?" I don't think this is it just yet. I'm also keeping an eye on the RSI. I've been talking about this, how we've gotten close towards that 23 on the daily. Right now we're at 29. I'm looking for this to cut through that 20, get back down to, like, let's say 14, maybe even 18. Then I think we're going to be in that oversold territory where we can see that bounce coming. Like always, we're going to use the RSI to kind of confirm the bounce there. But we're also looking to see it get into that real oversold territory below the 20 mark, or the 25 at least. Right now, it did go down below there for a second, bounced a little bit, and now we're washing right back down. Let's take a look at Disney. Disney was going up after hours here on their earnings. Let's take a look at where we're at now. We're still up a little bit here. Let me read you guys the numbers on Walt Disney here. Earnings per share, we're at $1.08 adjusted from $1.07 estimate here. Revenue was at $19.25 billion, $18.8 billion estimate, so beating there. This is where it was interesting, was what everybody, I think, was paying attention to was the total subscription. The total subscription here hitting 137.7 million, beating the expectation of 135 million expected. This is actually really interesting because we've been watching Netflix. Netflix was reporting a downward slope on the guidance. Disney not necessarily showing us that kind of weakness here. And that could mean that, hey, maybe just Disney's taking a little bit of the market share that you're seeing from Netflix. And that's kind of common, right? Whenever you have a leader, and then all of a sudden you get a whole bunch of competition to come on in, where are they going to take the bite from? Yeah, there's the overall market, but a lot of times it takes the bite from the leader. And you can see Netflix coming on down here. And I think it's going to be interesting to watch how they react also off these numbers. You can take a look. Netflix was going up a little bit off of these numbers, but of course, nothing real here, just kind of more unchanged. We'll see what happened there. Let's keep going towards another one. Rivian, I know, was on a lot of people's radars. It is actually up, which is kind of interesting. They reported a Q1 EPS of $1.77 loss, a loss of the $1.77, missing the $1.44 loss estimate there. The adjusted EBITDA loss of $1.14 billion versus a $396 million loss in the same quarter last year. Production was at 2,553,000. So not the biggest numbers here. I mean, you can see the loss there. They missed by almost about 33 cents there. Well, 33 cents exactly. I mean, this I thought would be going down on this number. It is going up here. Could be kind of a little bit of a trap. We'll see what happens on Rivian, see if it comes down tomorrow. But I mean, it did go down a lot already today. It's basically down from the open still. We'll see what happens here. All right, let's go ahead. Let's get into Beyond Meat. You guys know how I don't like my fake meat, or should I say fake profits over here. I've been talking about Beyond Meat at 200. I was calling for the demise of this to come back down to 50s. And man, this thing didn't even hold on to 50s. It couldn't hold on to 50s, went through the 50s, held there, bounced a little bit there, but definitely just chopped right back down. And you could see I created that line. I was talking about 50 in December. When was this? December 16, 2021, guys. That's why I like having these lines that tell me exactly when I drew that. That's when I was looking for this to come back down and just break through there. And you could see it broke through the 40s, now down to 20s, beyond me getting crushed here. Earnings per share, they EPS missed here, $1.58 loss here, and missing from $1.01 estimate there. So a loss there of about 57 cents there. So you can see there the EPS missing badly. Sales here at 109.45 million, missing the 112 million, 112.4 million estimate. You can see them definitely taking a hit there. Bros is getting murked. Yes, Bros is getting murked. And a lot of this has to do with the market. I don't think this has to necessarily do with Dutch Bros, but this is actually an opportunity now that I'm going to be looking for. I just need to get it at the right time. You got to be patient with these times right now. It's not about just getting into every stock. What I say is you got to be working the list, guys. Work your list of stocks that you guys want, whether it be on paper, whether it be on a list in front of you. Whatever you got to do, start working that list, because I think this is going to be an important time for us to continue on doing that. So that's what I think is very important, guys, is right now is just working your list, right? What do you want to go ahead and get at a certain moment in time when you feel the market is bottoming? I think this is going to be important. We're going to keep on watching. We'll see what happens. All right, just want to give you guys a little bit of a preview what's coming on next, guys. Stay tuned, guys. We got an interview with Jay Woods, Chief Market Strategist. He's going to be joining us from the New York Stock Exchange. He's an executive floor governor. And I mean, you guys have probably seen him on pre-market prep, but I'm super excited to get finally into an interview. We'll be going into that shortly here. All right, let's go ahead. Let's take a look here at Mara. Mara, my trade of the day, gave in on live trading. I mean, hey, like always, guys, this isn't for investment advice, but educational purposes only. And the reason I was looking at Mara for the short was, I mean, we've been seeing Bitcoin just get shellacked. Let's just be honest. And that's what I was kind of watching here. I was going to take a look to see what was going to happen at 12 o'clock here. At the $12 price point. I got short there at 1180s. It popped for a second there above there, but definitely just started getting weak. I'm actually still holding this one. I took some profits down towards 11, then took a little bit more off of it down towards the 1050 area. Now I've been holding on to it. I got a tiny shares amount left here on Mara. We'll see what happens there if it continues on the way down. All right, guys, so let's go ahead. Let's get into our interview. I think Jay Woods is in the back here. I'm sure he probably is going to just join us on the phone. So he is on the New York Stock Exchange. He probably can't join us with the camera here. So I'm going to go ahead and get him on here. I'm going to play the trailer, and then we'll have him right on. Let's go. Let's go.
I tell all my CEOs, this is a very, very, very important platform. And look, all the other platforms are important too, but you're up there now. You're way up there.
Best investments you can do in your future is actually go and re-educate yourself on credible sites and credible resources like Benzinga. I think you guys have been killing it.
The comment section on this show is remarkable. Like the quality of the combo, and just big shout out to you and your community.
That's what I love about you guys. You know, you just had all your callers in right then. And it's all about the community here at Benzinga.
All right, let's go ahead. Let's dive in our interview. I think Jay Woods is ready for us here.
I'm ready. Can you hear me?
There you go. I got you. If you want to hit stop cam, maybe so you don't have that black, then we just get you in the background, but it's all good.
All right.
There you go. Perfect. That works for me. I got you audio. Welcome here, guys. This is Jay Woods, Chief Market Strategist at DriveWealth and the New York Stock Exchange Executive Floor Governor. How you doing today?
I'm doing well, and I appreciate you having me on. I listened to the first segment, and it was as if you were giving my morning call this morning to my team. No one talked about Toyota Motors. That was a nice topic that you brought up because that's going to have an impact on the automotive industry. So that was pretty good. But it's great to see you, and I do have my camera. I don't know if you guys had access to that, but
yeah. Let's see. Let's try to get it back on.
Try see if you can get that back on.
All right, so it says black on it's like showing a black camera on the top of where if you're using Chrome, there should be like a little camera. a little
Okay.
camera thing that you can right click to make sure that you got your camera selected there.
Nah, we're gonna
If
have
not,
to do
hit
audio.
yeah, don't worry.
Okay,
We'll just
yeah.
do audio.
I
Don't
don't
worry.
want to. Yep. All right.
We'll get you back on, Jay. This won't be your only time, hopefully. Yeah, and let's go ahead. One thing I did see in your profile that I want to kind of mention, just to kick it off and get some icebreaker going, is I heard about your softball pitching skills.
Wow, you really did a deep dive. That's a question I haven't been asked, and you don't want to go on that tangent. But yeah, no, I played softball for years. In fact, I played on an old NYSE team here, and now it's my little hobby on Sundays. 5-time defending champions. Let's throw it out there to my team at the Wolfpack.
Hey.
Yeah, that's my Sunday hobby now. As a pitcher, you get a little older, you got to dodge those coming up the middle, but. It's one of the ways I relax on the weekends. It's a lot of fun.
All right. I played my
Yeah.
baseball days. I gotta get out there, maybe.
You should. It's fun. It's a good way to we talk to markets half the time we're out there too. So
can't go wrong.
That's what we do.
All right, so let's go ahead. Let's dive into it here today. We got the CPI data. I know that you saw it. What do you feel about this inflation data that we got today?
Yeah, I mean, it came in a little hot. I didn't think it was too shocking. But you break it down like you did in the beginning of the show, and you see energy, food prices, shelter. These are big things. And while we're hoping we're near peak inflation, I don't know. When I filled up this week, it was the highest it's been, at least in New Jersey. Actually, they fill it up for me in New Jersey. I've had this conversation with some of your cohorts. Food prices. I went shopping last week, and I mean, eggs up 10%. Everything is hitting us. So. We're hoping we're near peak inflation. The market got mixed signals. As you saw, we were in the pre-market, we were up 300 Dow points, and then we opened down, then we rallied back, and then the overall trend took hold. And that's what even if it's a positive read, the trend continues to be down. The Fed continues to lead us down a path where we're not confident as market participants, and until we can get more, I wouldn't say clarity, because I think Jay Powell is very clear in his message, but then the Fed presidents go speak and they're giving you mixed signals. And, pundits like us are saying, all right, 50 basis points is not enough. Let's rip the Band-Aid off. Let's go where we have to go. And until we can get more clarity from the Fed, as a technician, everything is set up to continue on a downward draft. We just haven't had that capitulation moment, and that's the frustrating thing. People always ask, well, what's the mood on the floor? What's it like? It's frustration. I mean, we know that we're in for a rough ride. A lot of people have gone on these shows and tried to pick bottoms, call bottoms. Good luck doing that. If you can, God bless. But I think the bottoming is a process, and I would love to see the capitulation help that process along and speed it up. But right now, we may have a slow rounded bottom, and these things take time to resolve.
Yeah, definitely. I think that's what a lot of people are looking for. They're like, when's the next V bottom, right? I mean, everyone got a little, I think two V bottoms don't happen very often, right? I mean, at least from what we've seen in markets before. I mean, at least not like what we saw in the pandemic. So definitely it's something that we're looking for. I myself, I'm looking for that, like that moment when the bulls just really give up here. I don't think we've seen that yet. I feel like the bulls, like, anytime that we start rallying, you see them start coming out, that you see the Twitters start moving, calling the bottoms like you're talking about. Even today with that rally we were seeing today, it looked like it was just a dead cat bounce to me. But I mean, you guys probably saw it. Everyone just starting to be like, oh, well, are we going back up here? Is this the bottom? And then boom, we're right back down through those lows that we saw in the pre-market here. Do you feel that we're going to get a moment like that where we really see some washout?
It feels like it's coming, but the volume hasn't been as strong as you wanted to see. The stocks under the 200-day moving average, we're starting to see some really ugly numbers. NASDAQ, 82%, the NASDAQ composite, that's over 3,000 stocks. And then the S&P 500, it's about 72% below. So, but the overall breadth was fairly negative today, but it wasn't anything that you're like, oh my God, they flushed it out. I'd love to see 9 to 1 or more on the downside. I'd love to see the RSI oversold. Your chart on the SPY is exactly what I'm looking for in the overall S&P index. You put up some nice Fibonacci retracement levels from the COVID low to the recent high, and I get the same numbers around 38.10. And then if you were to put an anchored VWAP, the average volume weighted average price from the low back in 20 during COVID to where we are now, it also coincides with that number. And then to throw in another caveat, 20% from the high in the S&P 500 to an official bear market, if you will, is the same exact area around 3,800. So everyone that I'm talking to, the technicians in my community at the CMT Association and the people on the floor, we feel like that's where we may get a pause. And then let's even take a step farther. And I don't want to be scary. I want to be realist because I am a realist when I look at these markets, and it's an ugly condition and no one likes going through it. But look at the S&P 500 from the COVID levels. Look at the Dow from the COVID levels. We still have a way to go to get to those COVID highs. Now, the Russell is interesting. The Russell just hit the COVID high back in February 2020 today. In fact, it closed right at those levels. So I'm keeping an eye on the Russell and the small caps. Maybe they pause, and it's not the leadership you want, but it's interesting leadership. Now, you may want to widen that back out a little more to the left to see that COVID high. There you go. And we're coming into those levels. We've seen it in so many of the individual names. I mean, we can throw a dart at any ARC name. That not only has it hit that COVID level, it's breached it. Disney, we've seen good price action after hours. That's good to see. But that already breached its COVID levels too. And this is the new theme that we have to watch from a broad-based perspective is it going to stop, where we were February 2020 before COVID really put a hit on this market? And those are the levels that I'm eyeing on the downside. On the upside, listen, day traders, swing traders, you're going to get some big moves. You're going to get some fast moves. We're under the S&P 500. And Josh Brown, a friend of mine, tweeted this out. Well, actually, he doesn't tweet anymore, but he put this in his blog. 47 of the 50 biggest moves upward happen under the 200-day moving average. So from fast moves down, come furious moves in the other direction. So your day trading community, your swing trading community, which I was a big part of as a market maker for years, you're going to have some big rallies. But right now, the evidence says you want to sell them.
Yeah, no, definitely. I think it's both ways. That's why I've been talking about this market. You got to be willing to play both ways and probably be quicker to the returns than most times, right? At least that's what we've been seeing out there. It's kind of it's been harder to see those continuation patterns.
Yep.
That's what I've been seeing. You'll get the pattern and maybe you'll get it back to the high, but it's completely different seeing that continuation above there and kind of like, measuring flags and using that kind of fib extensions, which I just personally haven't seen it too much. I've been doing better swinging short now. And I mean, I'm sure a lot of people are if they're looking to the short side now. One of the things that I wanted to talk to, and we can get out of just the environment right now, it's more about your style and what are the things that you like. I am myself studying for the CMT, and I saw you the other day on the CMT symposium. So I want to talk a little bit more about maybe what are your favorite indicators to use, at least maybe for description or how you use them? What are some that you like?
I mean, they change. The process is always changing. You're always trying to improve that process, as you know. And right now, you're making money on the short side. Why? Because the trend is your friend. The trend is going down. Until something changes that, you'll play from the long side. So momentum indicators are crucial. When I was a market maker for my years down here on the floor, I started with simple RSI and Bollinger Bands. You break the midpoint of the Bollinger Band, you get momentum. And just because you break above the top part doesn't mean it's time to sell. But you look for those key levels where it breaks. So Bollinger Bands are very important to me. RSI levels and MACD crossovers. So moving average, convergence, divergence. Whenever you see it, especially on a histogram, now I'm really throwing some crazy things at you. But I know you understand, but for your audience, when you see certain indications, just changes in behavior, those are opportunities from a risk reward standpoint. As a trader, you want to get involved. But I say this time and time again, and I said it at the symposium, I'm going to say it again. As a trader, your three biggest jobs are risk management, risk management, risk management, risk management. And when you enter that trade, as you do, you want to know, okay, where's my stop loss? What is my pain threshold? So from a short-term perspective, I use a lot of Bollinger Bands, RSI indicators, but recently, a lot of anchored VWAP. Brian Shannon, I hope you've had him on your show at Alpha Trends. He does amazing work with, VWAP levels, because that's what's changed the most in my career. When I started down here 30 years ago, there were people yelling and screaming, and you could get a sense just on the crowd and the noise. And I miss that. The noise. You can't tell if the market's down 1,000 or up 1,000 because there aren't enough people to react to it. But everything evolves, and anchored VWAP is how traders on institutional desk trade. They don't want to pick a price, and price is what matters to us as traders. But you want to buy 100,000 shares of, say, Disney tomorrow because the earnings are out. You're not buying it on the opening because you think it's going to rip afterwards. Years ago, traders would do that. I think it's oversold. I'm going to buy it, make a stand, and if it went up, you were a hero. Now, in order to succeed in this business as an institutional buyer or seller, you want to get the anchored volume weighted average price, the volume price of the day. So if Disney tomorrow trades from 105 to 110 and it opens at 109 on 1 million shares, then trades another 1 million shares down slowly over the time, your volume weighted average price will be skewed more towards where it opened, because that's where half the volume was. This is how people are judged. It's how markets evolve, and now people trade fractional shares. People trade in little amounts, and that has been my pivot at DriveWealth, is to focus on those traders and pull away from the excitement of the floor and the day trading that I had to do as a market maker, and focus more on the longer term. So longer term, I keep it simple. I think any long-term trader buying what you know, buying what you use, to get into this market, you want to look at long-term uptrends. You want to have a good sense that this company over time, like an Apple, even though it broke a key level, you didn't even mention Apple. We got to yell at you for that. I'm sure you're going there. But that was a stock that broke a major level today. And as a long-term trader, maybe people took some off the table because they had a nice gain in it. But that's the one to watch. And I hate to say, hey, there's one stock everybody's watching in the market. And but when that one stock, Apple, is in almost every ETF that trades outside of a utility ETF, you need to follow it. You need to pay attention to it, because as the largest U.S. market cap stock, something changed today, and that has me a bit concerned.
Yeah, I agree. We talked about that long-term trend line it was holding. It was a long trend there that we finally started breaking out on the downside. And I mean, you could see when it was rejecting off the 170, Apple, it just couldn't hold up there. Then we had this when we had that rally, that huge rally, and I talked about that. I tried to compare it to 2008 rally that we had when we went up 13%, and then eventually the SPY went down 16%. And now we've been seeing kind of a very similar time. I would relate this now a little bit closer towards the .com, but I know you've traded through both times. What would you think this is kind of more closer towards .com era or more that 2008 time?
No, it's definitely more like the .com. Look at how we closed out this year with the record number of IPOs, the SPAC boom, retail investors coming into the market like they did in the late 90s because the internet allowed them access to the market at a cheaper price point, $9.99 a trade, $4.99 a trade. Now we trade for free, and you can trade in smaller amounts. And so we had a retail revolution in a sense in both times. A lot of companies come to the market, and there was euphoria, there was excitement. And, I remember being here in the late 90s in the old timers, because I was young back then. Now I'm an old timer, walking around and just being in disbelief. This has got to end. This isn't going to end. I was that old timer the last 6 months. Just unbelievable how all these new companies came to market. What will be interesting to me now is, where can you find that next Amazon? Where there were stocks that got pummeled during the .com that didn't deserve it, and they came back. Could it be Roblox? Could it be Coinbase? I don't know. That's where you have to really do your work and believe in those companies that you think that are going to survive and be able to pivot. And that's the next job we'll have ahead of us over the coming months, is to dig through the rubble and find those diamonds in the rough.
Yeah, definitely. I agree. Like I've been talking about it with our audience here. I've been saying it's time to start working that list together, right? What type of stocks would it take, and what would it take for you to start dipping your toes in? And we got to have the list together, because there's going to come a point in time when, yes, I think there is those times to catch stocks that could eventually get back up there. I mean, I don't think there's going to be some that will get through the pain through this time. And I think that you have to have that list ready. I'm sure you're working on your list, Jay, and keeping a close eye. Last thing I want to mention is, what have you seen from the earnings that have come out?
The earnings, well, it's interesting. I want to watch how Disney follows through. It's about the conference call. It's about the guidance.
Yep.
The companies that have done well, a boring
We're
stock like
actually in the
Sherwin
red
Williams.
now. We're actually in the red now for Disney.
There you go. And they beat, right? I mean,
Yeah.
So you're seeing companies beat, but those calls, that guidance, that will punish a company. I don't want to see Disney break $100. I mean, we have another pocket below there to the downside on a technical basis. But there are companies, Microsoft, Sherwin Williams, that had great earnings, had a great quarter, didn't really guide. In fact, Sherwin Williams is, to me, the one that said, yeah, the supply chain issues are starting to deteriorate. Things are starting to look up. And they had a 2-day run, and it didn't matter. They sold off. And you can see that pop on earnings. Where are you? There you go. That little gap. That gap is starting to fill. These things bother me because fundamentally the story is there. But technically, in this market environment, earnings are the winners, just don't go down that much. And that's not a good environment. As somebody that picks stocks, you want to be rewarded for picking a winner like you did because Sherwin-Williams had good earnings or Microsoft had good earnings, and then Microsoft broke down. Facebook is doing it now, or the Meta platforms. I apologize. Change the ticker to Meta, and I'll call you Meta. But right now, Facebook, it's filling that gap from the earnings. And, their earnings weren't even that great. They were better than some whisper numbers here. And this would have me concerned because the price action is what I like to follow. And the news was somewhat positive. It was, better than bad for them. And now we're seeing these gaps fill, and it's going to retest the lows. And if it doesn't hold, which in this environment, if I was a betting man, I would say it'll have trouble holding. We could have another leg down over the time being because the momentum continues to be negative, and stocks that do have good earnings, if their guidance isn't through the roof, even if it is, they're still struggling. And to me, that's not an environment that's friendly. And you want to, as a long-term investor, just not look at your 401k every day. As a young investor, you want to buy slowly over time. And this is, you're going to look back and be like, oh my God, I could have gotten this stock cheap, or I could have dipped my toe in slowly. But for this day trader, swing trader, which I love and respect and miss so much, there are going to be some crazy moves. And these stocks that are beaten down, yes, have that list ready and draw those trend lines. And when they break, you now have an entry and exit point, and you can really define your risk and be smart about things. So that's, all different levels how I look at things. And, as a technician, I'm very proud to hear that you're taking your CMT. What level are we at?
Honestly, I went to go take the first one, and I had some issues with kind of the remote proctoring, taking the test, and that kind of thing. But I've been ready, man. I even have a study guide next to me. I talk about it all the time. I tell people, you got to have that study. You got to keep working at it. It's always about that.
I'll tell you one thing to help your studies. I don't want to hog your whole program. I know you have other things to do.
Of course,
but you have your study guide with you, and you try a different indicator that you're studying in your practice, and you're going to be like, what is this Elliott Wave? I don't even think we have Elliott Wave anymore in there. And some people love it. Some people love Ichimoku Cloud, like Katie Stockton, the Mark indicators. My friend Mark Newton's into that. You find the one that works for you, and you find your process. And if you have problems with the Proctor people, I have some power over there. You can talk to me offline, and we'll see if we can fix things for you. But I'm glad you're studying that, because it's going to help your process, and it's going to open some avenues, and then you're going to look at some other things and be like, what the heck is this? It's not for me, and that's fine too. So it's exciting.
Yeah, it's definitely helped my understanding. I used to know things like, I know what VWAP is. There's a completely different knowing the actual mathematical equation for VWAP, so you could really understand where the data is coming from, right? It's the uptick volume with the uptick of that, and then it's also divided by the downtick volume and the downtick. And I think it's important to understand things and get deeper understanding, because that's really when you can understand it more on a theoretical basis than just having a definition, right? And I think that's the important part. Thank you for joining us, Jay. I know that I enjoyed your speech at the CMT symposium. Looking forward to meeting you next year at that next year's CMT symposium, and look forward to having you back here on Money Mitch. Thank you, guys. This is Jay Woods, Chief Market Strategist at DriveWealth and the New York Stock Exchange Executive Floor Governor. Appreciate you joining us, and we'll have you back on.
Mitch, love to come back on. I'd love to host you down here at the New York Stock Exchange one day. And next time we come on, we'll get that camera because I had a great view of the stock exchange right behind me that I was hoping to share with you. But we'll do that next time.
Hey, thank you, Jay. We'll see you next
Take
time.
care, Mitch.
And take care. All right, guys, that's going to do it for us, guys, right here on Money Mitch. Once more, going into overtime. You guys smash the like if you guys enjoyed that conversation. Sometimes I just can't cut my guests, guys. They're giving me too much gold, and that's really what it's about. It's not only for me to bring you guys the stocks that I like. You guys saw how I'm looking at, some short ideas, but I want to bring you guys those credible opinions out in the market, the real guys in the framework that are doing it for us, right? And so I hope you guys have been enjoying the interviews lately that we've had on. We've had 3 great interviews this week. Please let me know in the comments below if you guys want to see somebody on this show. I'll go ahead and reach on out and we'll keep battling. I'll see you guys tomorrow on live trading. Until then, guys, join me on right here on Benzinga, and I'll see you guys. There's some other shows coming on up. You got some webinars if you guys want to keep learning, keep battling, and like always, work on a skill. Like Jay said today, hey, maybe it's, hey, I want to learn what the MACD does today, or maybe it's average true range, or maybe it's the MFI. Maybe it's the money flow index, or maybe we're going a little bit changing on up. Maybe we're using moving averages. Always work on a skill that can make you move forward in your abilities. We'll see you next time right here on Money Mitch.